Okay, moving on. So here we are. We're a couple minutes behind, so I'll have to move through this quickly. But we're going to switch to the financial 15. And we're going to talk about, should you roll over your 401k? I do have a question before we do that. And Debbie writes, not to go off subject, but would it be wise to buy some silver or gold outright due to the direction the world is going? I'm not going to talk about that, Debbie. I appreciate the question, but I'm not going to talk about that in general. If you want to schedule an appointment, you can do that, and I'll give you my thoughts about it. But my general thoughts are, it's good to have representation across all markets, and with proper asset allocation, which is the pillar one of your 3 pillars of investment management, you'll have that with good asset allocation. So I've just moved, if you saw some commotion here, I've just moved this down. And if you're just joining us for the Financial 15, we're going to talk about, should you roll over your 401k? And those 3 dots mean and other plans, and so on. So, or your other plans. And I put some notes here, but I just want to share with you how big this is. And I'm sorry, if you're just joining us for the Financial 15 on YouTube, please hit the like, subscribe, and notification button so that you're kept up to date on everything. And if you want to look at or listen to the entire broadcast of our weekly webinar, you can also find that on YouTube. So there's 2 other portions to that before we head into this Financial 15. But let's dive into the Financial 15. And that is, should you roll over your 401k? So there are many things to consider here. And in fact, the regulatory agencies just put out a checklist about a year ago that we have to go through and identify. And I just put some notes here, but let me just share with you. I've got some resources, and this is what I mean. This became much bigger. Where the heck did I put them? There we go. So first of all, I went to our, the Ed Slack group, and they have this whole checklist of things that is 7 pages long. And they have this whole pros. I actually tried to condense it, but even that was getting a little more than I want to deal with over on this call today. But it again just shows, first of all, how big this topic is. So the things we're going to talk about are not going to be all inclusive. But what I think are the vital things, some of the vital things to consider when you're considering rolling over your retirement plan or 401k. But it's not everything, and I can't quite. I'm going to cheat a little bit with you folks here. Look, here's the 7 pages of the checklist, and this is just one example. So this is what Ed and his group called modules, and we go in and if I'm searching for something, what are the pros and cons? Like I did yesterday, what are the pros and cons of rolling over a 401k to an IRA? And there are 7 pages of considerations here. Really, I just can't say enough about the resources of this group. So let me get back to my points here. So first of all, I want you to understand that if you roll over your 401k or other retirement plans, so if I say 401k, just assume I'm referring to other retirement plans, it's a tax-free transfer. Please don't let anybody tell you, because sometimes we get bad information from the people on the phones when we pick up and talk to our HR people or the providers. It is a tax-free transfer. You really have to work hard to mess this up. You want to do a direct transfer to an IRA, if that's what you're deciding to do. That says transfer. This word says transfer. I promise. Let me rewrite it. You want it to be a direct transfer to an IRA. That means it's made out to, the check is actually made out to XYZ custodian for the benefit of J. Smith. Right. So you can't, even if you receive that check, which sometimes you have to, like Fidelity, for example, they have to, they require, even if it's being rolled into an IRA, they don't mail the check to us. Some custodians do, or some providers do. But Fidelity, for example, is the largest 401k provider out there, but they'll send it to the client, and then the client then has to send a check to us. No big deal. The client can't deposit this into their checking account because it's made out to the custodian. We use Charles Schwab for an example. So this would be Charles Schwab and Company for the benefit of J. Smith. but it is a tax-free transfer. There are times when you'll call and they'll say, well, we have to withhold 20% because it's a distribution, and that you should almost just hang up and ask for another person, because that person does not know what they're talking about. That is a tax-free transfer. You have to consider fees and costs. There are fees and costs in your 401k plan. There are going to be fees and costs with your new IRA. So whether it is simply trading costs and you're doing it yourself, or if it is advisory fees for financial planning fees, and you're hiring a professional to do it, you have to evaluate that. But don't think for a minute that there are no fees in your 401k or your other retirement plan. So you should line it up. Here it is. 401k, IRA. My 401k is going to cost me, 1%. My new IRA is going to cost me 1%. My 401k has admin fees of, that's not 1%, say 0.10%. There's additional fees, in this custodian of, 0.5%. Who the heck knows? And then you have to compare, and you have to see, a value or not of rolling that over to an IRA from a cost point of view. But there are almost all 401ks have a cost, and almost all IRAs have a cost. You've got to look at what the benefits are, right? From one to the other. So be aware of the fees and costs. Flexibility. Flexibility may be a benefit. So flexibility of investments. Investments for sure. And you might also, let me add advice in here. So it could be that many 401k providers will offer some level of investment management. So they'll say, rebalance your accounts. We help you. We put together the mutual funds or the fund choices within that, and we'll manage that, and they charge a fee. Then you have to determine if the advice that you're paying for outside of the IRA is more than just investment advice. I always say it's shocking to me that these large firms say, we don't give tax advice. They write it. They disclaim it. We don't give tax advice. When taxes is going to be, and anybody's, one of the largest expenses during retirement, and they just hands off it. Because it's complex. CPAs don't even know the rules, right? Some CPAs don't even know the rules. So they don't want to get involved in it. So you've got to see if that advice is worth paying for, or if it's not, on both sides of that ledger, right? The 401k and the IRA. But flexibility, you know that in most cases, your 401ks have a lineup of mutual funds. You're going to have a bunch of, age-based funds or goals-based funds, the 2050 fund, the 2045 fund. And then you may have some individual choices that you have to go in and choose yourself. Whereas if Debbie wants to, as she asked about investing in gold and silver, this is not a recommendation, but if she couldn't do that in her 401k and she wants to do it in her IRA, she could do that. So she's got greater flexibility. As we talked about, advice, more access, potentially more access. So you can access your IRA. You can do, we're going to talk about Roth conversions. But your access to your funds could be greatly restricted inside of your retirement plan. The worst offender to this is, and you've heard me say it, is TIAA-CREF. TIAA-CREF commonly holds on to the money that they are trusted to care for. And there are many, many, many examples of people that are deep into their retirement, well over 59 and a half, and they can only access 10% a year of their own money in retirement. So your access can be very, very limited. Whereas if you're able to roll that over to an IRA, you really have full access to it. You can make your own investment decisions with or without a financial advisor, financial planner, and you can make your own distributions. It might be very, very complicated to get your own funds out of the 401k, even if it's not restricted, just because you have to deal with plan custodians. Somebody has to sign off on it. You have to send it to HR. You have to listen. I'll share an example. We were rolling my own wife's 401k over from her previous job many years ago now to her 401k that we have as a company. And God bless him. That custodian who the plan sponsor, the company she used to work for, it took years to get them I am not exaggerating, years just to get them to sign off on the paperwork. It would, they'd put it aside. It would get lost. I would call, come on, what are you doing? And it was a big deal. So the access is important. And you could do Roth conversions. Now, you might be able to do Roth conversions in your plan as well, but that is really uncommon. So you want to figure out your own schedule and what makes sense for you. Pay the tax. Yeah, of course, have to pay the tax, but whatever makes sense for you. But Roth conversions are much easier to schedule and do in an IRA compared to a 401k, even if you can do them in your 401k. Now, don't mix these up. If your plan allows for Roth contributions, you still are probably not able to do conversions. Few plans allow conversions, and few plans, if they do allow conversions, allow you to do them over time. It's typically a one and done scenario. Sitting here today, April 18th, 2023, that could change. So Roth conversions, you have more flexibility to do Roth conversions and do some tax planning for sure. Tax planning. Now, Ed has a point in there that says estate planning is easier in an IRA, and I want to ask him about that when I see him next week, because I'm not quite getting that, but that's okay. I'll ask him now. In the on kind of the pros side of the 401k or rolling it to an IRA. Well, actually, let me go back. So this is still a pro of rolling to the IRA, is NUA, or net unrealized appreciation. So if you don't know what net unrealized appreciation is, you can actually go into our special webinar section on attleborowealth.com. I did a whole discussion with, I think it was Andy. Yeah, I think it was Andy Ives, about net unrealized appreciation. So what is net unrealized appreciation? Net unrealized appreciation is when you have a company stock in your 401k plan. It may make sense for you to distribute that company stock into an IRA, or distribute that company stock into a non-IRA account. You have the ability to you'll pay ordinary income tax on your cost basis. It gets complicated. That's why I want you to go to that webinar, but you pay ordinary income tax on that cost basis, just like you earned it, but you pay capital gains on any growth of that company stock. So if you work for Apple, for example, it's not a recommendation to buy or sell Apple, but if you work for Apple, for example, and you had Apple company stock and it cost you $10,000 and now it's grown to $1 million, well, you would only pay earned income tax on that earned income tax. Wow. Ordinary income tax on that $10,000, you would pay capital gains on the entirety of the growth, and you can schedule that capital gains tax. The only thing you have to pay tax on in that first year would be the ordinary income. So again, that gets confusing, but you can, if you roll your funds over to an IRA, you can take advantage of net unrealized appreciation. And hopefully you're having a discussion with a financial advisor well before you retire, because I hear people all the time saying, oh yeah, I had a bunch of company stock in there, but I did what everybody said to do, and I reallocated it into other funds. And now you've given up that opportunity to take advantage of net unrealized appreciation, if that makes sense for you. So I understand that's a confusing one. Spend more time on that. If you have questions about that, go to that webinar that talks about net unrealized appreciation. And if you still have questions, you can reach out to us at questions@attleborowealth.com. Backdoor Roth IRA contribution considerations. Be careful if you think that you're going to still be working. Say that you have this IRA 401k plan at a previous employer and it has $1 million in it, and you're saying, I'm going to roll that into an IRA, but I still want to make Roth contributions. And I did a whole webinar about backdoor Roth contributions, I think in November. So you can go find that if you don't know what I'm talking about. But if you take that $1 million and you roll it into the IRA, it's going to completely mess up your opportunity to do backdoor Roth contributions because of what's known as the pro rata rule. And the pro rata rule says that the IRS looks at the entirety of the IRAs when they consider how much of your conversion is taxable But if it's kept in the 401k, then it is not considered at all. So that may be a good reason to keep the money into your money into a 401k. And then we have the age 55 rule. So you can't access your funds in most cases prior to 59 and a half if they're in an IRA. But if you retire at age 55 and your money's in your 401k, you can access it without a 10% penalty. So if that's important, and it could be age 50 for certain government employees, police, fire, etc. So that's important. If you think you're going to retire early and you want to start taking distributions, you may not want to roll that 401k over to an IRA so you can have access to your funds prior to 59 and a half. And then you have the still working rule. So if you have $1 million and you roll that into an IRA, if you're still working, say you're 73 years old and you're still working, well, now that's rolled into an IRA. At 73, you have what? You have RMDs. But if you kept that $1 million in your 401k and you're still working and you don't own 5% or more of the company and you're still age 73, then you have no RMDs. That's the still working rule. Okay, so there are lots of considerations when you're considering rolling over your 401k to an IRA. Some of the big ones, as I said, were fees and costs, flexibility, access, the ability to do some tax efficient planning. I just came off a class, so I've been meeting with a lot of people, and time and time again, I'm showing people that just by doing things more tax efficiently, not spending less in retirement, not taking more risk in investments, just situating your assets from traditional IRA to Roth IRA, for example, over time can have a significant impact on the potential for your retirement. Sometimes it's millions of dollars. I've had, $1 million, $2 million, $4 million, $5 million difference by age 85 or more, just by doing things a little differently. So flexibility is very, very important, and 401ks can be very restrictive. So flexibility, access, not flexibility just in investments, but also, when you can access, what your schedule can be for wealth conversions. Again, even if you're going from a 1% 401k to the 1.5% all-in cost IRA, it still may make sense for you because people get really tied up in the individual fees, but they don't think about the benefits sometimes. And even with the paying a little extra fee or paying an advisor, so like myself, a financial planner, a fee, when you can see an potential increase in your retirement assets at certain ages of $1 million, $2 million, $3 million, $4 million, holy cow, what's that worth to you? Rather than, what's that penny wise, pound foolish kind of thing, right? So you've got to evaluate that. So access, Roth conversions, net unrealized appreciation. I think that's probably something that's sometimes a little overused, but when it works and makes sense, it can save you a tremendous amount of tax dollars. Backdoor Roth IRA contribution considerations. It may make sense to keep money in a 401k if you're continuing to do backdoor Roth contributions. The age 55 rule and the still working rule regarding required minimum distribution. So some of the key issues, as I showed you, there's 7 pages of considerations from our slot group module. I think I also did a snapshot here of the age 55 rule. I did the age 55 rule. So there's a lot of considerations, but it's an important consideration. You should take it seriously. And if you have any questions about it, obviously you can reach us at questions at attleborowealth.com. If you want to schedule some time to meet with me, you can do so at questions at attleborowealth.com. And other than that, we'll see you next week. It's 10:55. Have a great week. I hope the weather gets a little warmer. I know we're in Pennsylvania, so it's going to be 87 tomorrow or a Friday, and it's cold this morning. I had the space heater on here because it's cold this morning. But I hope you all have a great week. I hope this was helpful and beneficial. Love to hear your comments. So you drop a comment in that in the comment section of the YouTube video, or hit the like button. We like likes. I'd love to hear what you're thinking. All right. Have a great week. Take care.